morning, traders. Welcome back to the Everyday Growth Advisors live stream. Welcome back. It's a Wednesday. Good morning, everybody across the world. I hope you guys are having a great week. Not so much a very great week, but essentially, I think that we are breaking all kinds of barriers here with the market. Lots of earnings coming out positive, market selling off. We've seen this all before. Lots of bad information. Well, not really bad information, but kind of bad news being priced into this market early on here ahead of the election season. I did mention that the big tech sell-off will continue, and I think it is all dependent on where the market is pricing in the election results. Of course, it's a sea of red today. Pre-market update here. Today's update's not going to have any fundamental analysis with it, but because this week's live stream program is a little different from usual. Of course, this coming Friday, we will be choosing a new ticker for next week. So I definitely would recommend all of you guys to tune in on Friday to pick the ticker of the week for next week, as well as the webinars, which I have a couple of ideas in mind for. So a couple of things that I'm looking at. Boeing had positive earnings this morning, but the stock is selling off. As usual, we do not have much good news to project on into this market, and that is just an extension of showing how the risk is flowing out of equities. You can see the VIX shooting up here, pricing in fear, volatility, and just overall market jitters. Okay, I did mention a while back if the VIX were to drop below 28 level, that would be a nice time to buy. We got that opportunity, and unfortunately, not even I took that position because I'm actually remaining bullish on the market now because of the fact that everyone's bearish. Now, the more that I see people selling off here, I see sellers piling in this market. That makes me feel even more so like I should be starting to pick up these snap discounts for good companies that are trading at discounts, right? And some of those are like Apple, Microsoft, Google, of course, the big tech, which will be my primary picks, right? You have your Apple, Microsoft, Google, Facebook, Amazon, Netflix, Nvidia, and such, right? Walmart even. But entire market sea of red here. GE up surprisingly on the earnings beat there with the positive free cash flows, which is a pretty big thing for them. ADP also looking good with the 6% bounce here. Everything else really selling off big time. MasterCard with the bad earnings beat, not going by expectation here. And also the other thing that you guys need to take into account is some of these open interests, which I don't think anyone has paid attention to. And now that I'm actually, settling down from my apartment and I'm looking at things, I went through this with my intermediate course mentees today, and I want to kind of magnify or rather highlight this information that may be of use to you guys so that you can have a look at it. Let that load in the meantime. Let's go have a look at what the news is saying. Hedge fund that planned U.S. election chaos sees a blue wave. As I said, everybody is pricing in a Biden win. Now, I'm not really sure if that is exactly going to be true. What I do know is that the market is pricing it in, okay? Now, of course, it doesn't mean that the market is always right, okay? It just means that this is what the market thinks is going to happen, okay? And quite honestly, it's looking more and more possible, but I don't trust the polling numbers. I don't trust anything for that matter. It's better to just stick on the sidelines and see what happens here. We are in no rush to trade anything irrationally, okay? This event that you're seeing where the market behaves irrationally happens once every 4 years. And if you get caught on the wrong side of it, then you are absolutely going to be caught in the crossfire, and I don't recommend that, okay? So I would recommend be on the sidelines and observe what is going on and get in at the absolute moments when you know something is selling off irrationally, right? For example, how SPY is moving right now, that's definitely an irrational move down, right? And so when you see an irrational move down like this, what you can do is wait for the right moment to get in. And you will know what is the right moment if you look at a higher time frame and wait for those higher highs to come through, okay? So looking at this here, and if my computer wants to cooperate, obviously, just so you guys know a little bit of an update here. I was supposed to get my internet done today, but then the guy who came by forgot to bring the modem, or rather, I guess I forgot to bring the modem from the other apartment, and now I'm stuck with no internet. Again, I'm using 4G still. Tomorrow is supposed to be the day that gets sorted. So it's been a really tough 2 weeks for me, but you know what? I'm reeling, and I'm making sure that everything gets sorted as soon as I can. I really appreciate the patience and the understanding from all of you guys for coming through a live stream and even showing up to hear me rant about this stuff. So really appreciate you guys. So as you can see here, I've drawn 3 specific trend lines or other support levels. The first one got breached, the second one got breached, and now we are at the last line of defense here at 3300. That will be the next trend line, which coincides with the 23.6 Fibonacci retracement. Even I have failed, to predict that, we are possibly going to get bought up here. In fact, I thought that this would be the bottom right here. Let me show you, like right here. And then we saw another wave down, like a dead cat bounce again. So we're officially, trying to head down into that territory right there. Nice downtrend. But as I said, as long as we stay above this level here, this key level of support, and we get a bounce on the 23.6, there will be room to the upside here. Especially since you have big companies reporting earnings this week. A lot of companies reporting earnings this week. And even Microsoft blew earnings out of the water, but somehow it's still down, right? It just shows you the risk that is flowing out of the market. And you got to understand that when there's risk flowing out of the market, nobody thinks anything is a good investment, okay? So Microsoft down to 207 here, pre-market, looking really terrible. And so we have to be extremely careful with what happens here. Now, another thing is you have to realize that majority of these companies, especially for this week with earnings, if you go and look at some of these companies' contracts, you're going to realize that they have some insane open interest and volumes, okay? And good morning, everybody. Welcome in. If you're here, remember, smash the like button. I appreciate you guys taking your time out to be here. Good morning to all of you across the world. Hope you guys have your coffee ready and, whatnot for this live stream. Can't wait till my internet is fixed tomorrow so that I can properly stream on my desktop computer and have multiple screens on board. So really looking forward to that. So yeah. Ooh. Oh, I see what's going on. So what I was talking about earlier was the fact that there is a lot of open interest and volume on these contracts that are expiring this week. And what does that mean? That simply means that there is a possibility for these contracts to be squeezed, okay? If you go and look at, for example, the open interest for Apple, okay, for this week. Have a look at this data, all right? Just for this week's earnings, look at the call to put skew here. We have 782,000 contracts across all strikes. The open interest call percentage is at 65%, and the open interest put percentage is at 35%. There were 531,000 contracts traded till date. Okay, and so you have a volume and a put percentage of 60-39, which is really just showing you there are a lot of people betting on a positive Apple's beat. Okay, and what market makers or institutions may possibly do here is try to price you out of the market, right? How do they do this? And I was explaining this to the mentees on the intermediate course today, and you need to understand this, is remember that the power of the underlying, okay, remains with the person who owns the stock, okay? So let's say everybody starts betting on Apple earnings here, right? And they start buying 120 calls because they're bullish, right? And they say, okay, I want to be really deep in the money when Apple beats earnings. Well, what institutions see is a lot of people buying these contracts, and they can't possibly buy those contracts for themselves at 120. So what do? They start unloading their shares, okay? They start unloading their shares, and which is what you're seeing across the market here. What you're seeing across the market is a classic institution trap, okay, which they lay. This is the reason why as the market sells off further, I get more bullish, because I feel at this moment it doesn't seem logical that a company that is a long-term winner is sold off on a possible good earnings play. Okay. Now, obviously, we don't know how Apple's going to do for earnings, but they unload all these shares and at the same time buy puts, right? They buy puts. Why? Because everyone's buying calls. So what do? They get in puts for Apple 120, okay, and unload these shares. And then as soon as they see that, okay, enough is enough, they start, offloading their shares, and they've offloaded enough of it. What happens? Retail traders start to panic, right? Why? Because people who bought those 120 calls, and by the way, I'm one of them, right? I bought one of the 120 calls for earnings as a play, and that contract's down 50%, right? I have one contract. I bought it at $3 something, okay, and now it's trading at $1.80 or so, okay. It's down almost 50%, right? So what do retail traders do in fear is they sell those contracts away. Why? Because they want to recover as much capital as possible, right? But they don't realize that that's opportunity cost. And what you can do here is actually double down if you have a strong conviction that Apple will turn around, right? Obviously, this week expiry is a bit too soon, right? And then what do the institutions do? Right here is where they start to buy calls. Once everyone has started to sell their calls and get out of the market, and the general consensus is people stop betting on Apple calls, then they get into calls themselves and they sell you puts, right? They sell you puts. This is the classic institutional trap, okay? They sell you puts and then they start to buy the stock, right? And then Apple starts to go up. And that is when retail traders start to say, why does God hate me, right? This is the classic EGA trap that I keep focusing on. Then the stock goes up and everybody's like, oh my God, I can't believe I was just a week off. I was 2 weeks off. And that's exactly what they do to you, because they know that everybody's betting on that strike and they can see it. If I can pull it up, they can pull it up. And so therefore they can trap you and squeeze you out of those contracts. I hope that is somewhat enlightening to you, so that you can understand how these things happen. Okay, you need to understand how the institution thinks about these situations, and you got to be ahead of it. Okay, so yeah. Now, I know many of you are thinking, so then in that case, maybe I should just buy further out options, right? Well, yeah, you can buy further out options, but you don't buy further out options right now. You buy the further out options after the earnings period, and then you choose a realistic period of time to hit your strike. And usually, if you're playing a swing like this on Apple, you got to give yourself at least 50 to 80 days. Remember, 50 to 80 days is the golden number for your options contracts for time value to have both extrinsic and intrinsic value. Okay, so for you to have both intrinsic and extrinsic value, you got to have a contract that is far out and a decent strike. Okay, and that's what I want to bring up to your attention here. This is happening across the board, across all big tech, and I thought that it might be enlightening for you guys to know about these situations and how to break them down. Okay, now it's just really bad luck that I have been out of the markets for about a week and a half, and so I haven't really been paying attention to all of this stuff. But now that I'm back, I'm looking at everything slowly, and once I get my computer up and running tomorrow, my internet back up, it's going to be a lot more easier for me to communicate with you guys. My Twitter is going to be back online. My Instagram is going to be more active. My YouTube channel is going to be back to where it was, and I think that we should be looking at all these small nuances so that we can predict market movement. Okay. Obviously, there's a lot of other things that are at play. I'm not just talking about how institutions are manipulating the market. There are a lot of other things at play. But you need to understand that these manipulations happen all the time. And it's not like the institutions are singling you out. That's not what it is. Okay, it's not like they know, so they're purposely doing it. It just doesn't make sense for them to buy it for themselves. Therefore, they create a situation where it makes sense for them to buy it. Okay, it's a simple thing, right? Remember that trading is a zero-sum game. One person has to lose for the other person to win. Okay, so there has to be a winner and a loser. The winner wins and the loser loses. Then only there is a balance in the market. Okay, and that's just how option trading goes. So you got to be very, very careful. All right, let me read some of these comments here. Good morning, traders. Smash the like button. Thank you very much. Yes, please smash the like button, guys. If you're here, that's the only thing that I ask for is for your assistance to help me smash the like button. That would be really, really appreciated. Good morning. Good morning, Joanne. How are you doing? What's up? Melissa. Hi, Shoei. What's up, Big City Sound? Good morning, Shri. Hi, Andrew. What's up? What's up? T, what's the name of this beat? That was probably Type 9, something called Expertise. I'm guessing you were referring to the last one, since it was 829. Good morning, Chirag. How you doing? Hi, everyone. And T, hi, Poco Molowoko. What's up, man? Santosh, good morning. Azucina, what's up? CeeLo, hey, hey, hey. Francesco, how you doing, man? Bradley, what's up? Good morning. And hi, Meaty. What are the chances that, along with the second wave of shutdowns, we have another market meltdown like March? I think it's a pretty low chance. Statistically speaking, another market meltdown like that would happen it would be a black swan event, okay? So this market meltdown, and then if you say, we get another market meltdown like that, the market meltdown was here, but if you say we get another market meltdown, I don't think that's something that may happen anytime soon. We've already hit our quota for market meltdowns this year. And so statistically speaking, it's not probable. That's all. The skew is off. So welcome in, Thiago. I think market may be trying to price in another shutdown or Donald Trump not conceding the election if he uses. Good morning, Mark. Well, yeah, as I said, it could be pricing in a whole bunch of things, but what is it really pricing in? We'll never know, okay? It's just a whole bunch of things. What you need to know is that people are risk off, right? And people are risk off, you look at other types of investments, okay? So let's look at bonds and see what that's doing, right? Bonds are up here at 161 here, 10-year, the 20-plus year Treasury aggregates here. We got to look at the 4-hour chart here to see what's going on. So yeah, possible uptrend here back again. I don't see volume buying yet, so maybe not the time for bonds. How's gold doing? Gold's just flatlining. Silver as well, flatlining. And then, yeah. So looking at other things as well, I don't see people buying up risk-free assets. Neither do I see people buying safe havens. So this is more like a quick flush down. And you can see, make a correlation here that this might be a faster than usual recovery, if anything, okay? So this is more election related. Remember, this is jittery, this is fear, this is, a lot of emotions ruling the market here. Gonna hold my Apple 117.50 through my earnings. Sure, you could do that. But if the 3.3 level is broken downside, could that mean we're in a bear market? No, absolutely not. The definition of a bear market, guys, is a 20% retracement from the top, okay? We're barely there, all right? We're barely there. If we look at SPY here, we don't have such a big retracement, all right? It hasn't even reached correction territory, all right? It hasn't even reached correction territory. What is this? This is barely 5%. Okay, 5% is correction, right? You can see 5%. We're down 5% from this top here, right? This over here was also a correction, right? A buy up and then a correction. This was about 10%, right? So of 10%, 5%, these are all corrections. 20% drop, that's when we say bear market. We're entering a bear market, okay? That was the when we had the coronavirus drop, right? You can see this is a bear market, temporary bear market, right? But remember how quickly we resume from here. This was a 35% drop, right? So that was a bear market, okay? A possible bear market. But look at how quickly we reversed out of that, right? So the market does these things. And you can see we're barely, on the daily, we're actually just bouncing off the 50 here. That's what we're actually doing. If we, obviously we're a little below the 50 here when the market opens up. And we'll see if we are actually going to come down to the 324 level here. That's where we're hitting next to if, we continue to sell off. So 324, but 3300 is going to be a support here. If not, we're going to come all the way back down here to this level here, 324 here. Which is the bottom right here. So let me draw this in right here. This will be the last line of defense, guys. This will be the last line of defense, and I'll make that one yellow. So 323-ish, right? 324-ish. That's going to be the last line of defense there. But I honestly don't think that we're gonna get there. I don't feel that same bearish energy that we've been seeing all across the board. I think this is a nominal retracement back down. It's a very possible thing that happens majority of the time, but you just gotta play with the waves, ride the waves out. Just to confirm, you'd say it's best to wait this week out on all tech earnings and then make a 50 to 80 day out swing next week. Yes. Actually, I would wait to be honest, Sri, I would wait till after the elections are over. We're barely 2 weeks out, right? We're barely 2 weeks out from the elections. So I would say wait till after the elections to make your place, right? Make your place after the elections in 2 weeks from now, where you have a little bit of solidity and you know what's going on. Okay, this week's just not a good week to do that. Just saying. You don't think Europe is dragging us down just as much as elections? Well, let me tell you, it's possible, but the thing is that you got to understand, U.S. equities don't, and the U.S. stock market doesn't price in aggressively things that happen in other markets. Other markets price in aggressively what happens in the U.S. markets, okay, or in the U.S. in general. So there's this saying, right? When the U.S. sneezes, the whole world catches a flu, right? It doesn't work the other way around because the U.S. is still considered a superpower, right? And so it's usually the other way around where, the whole world follows what the U.S. does, okay? So anyway, let's continue our market breakdown here. Sorry, I kind of deviated, went on a rant a couple of times there. But I'm just speaking my mind, and I'm just trying to give you guys an update on what I see here as I'm unfolding this market together with you guys. This is the benefit. You get to see my thought process. I'm and as well as all your questioning, all of your, your things that you're posting in the chat are definitely helping me to solidify my own opinions as well. So, keep them coming. I love hearing from you guys and absolutely love, going back and forth with you guys about this stuff. It's not really, something that I detest or anything like that. I love hearing from you guys. So make sure, you guys stay active there. Which indicator do you use on TradingView to make those lines to see the percentage? This one right here. If you go under this tool set here, you click on the prediction and measurement tools, use the forecasting tool here, and that gives you the percentages. You can choose a point and then move it to wherever you want, and that gives you the forecast. Elections less than 7 days away. Yeah, that's what I'm saying. So 7 days away, elections, and then you wait another 7 days. So I say 2 weeks from now, it's the right time. Let the market settle down. Let the jitters settle down. I'm majority cash. I only have a few earning bets that I have made. I just made bets literally on Apple and Microsoft. And they're very small bets. So I'm majority cash sitting down, waiting for this discount period, this great sale to be at peak here for me to snap up my favorite companies once again, and then write them up again, right? This is the game, right? You gotta stay on top of it. I'm just very blessed that this past 2 weeks I've been busy enough for me not to pay attention to this. And so what has been happening is that I didn't trade at all. And this was the biggest blessing because me not trading actually got me into a situation where I saved a whole bunch of money, right? If not, I would have probably jumped in and out a couple of times. But I've always been scalping though. That's the thing. Got it. Thanks. The week after election week, I appreciate the advice. Otherwise, I know FOMO will drag me to an L. Yeah, that's the thing. Yep, absolutely. Time to save up money for players. Yep, that's what you got to look for. Okay, now Bloomberg here. Let's see here. China virus epicenter. Hubei lags. The regional growth picks up. Iconic London department store. China loosening yuan control. Signals appreciation and draw. And there. The funny thing is, I was looking at Bitcoin. And it's been moving kind of interesting the past few days. I don't know if you guys have been realizing this, but it's on a big time uptrend. And it seems to me like it wants to kind of make a move further up or something like that. And I wouldn't be opposed to trading some cryptocurrencies, especially since the dollar is so volatile right now. I know, we're approaching this resistance up here, which was at the 14,000 level, and we'll see how that plays out. But if we do break above that, I might actually get into this just as a side trade to trade it while, I wait for this election results. Trading cryptos can sometimes be rewarding if you know what you're doing. It's very algorithmic based, and the supply and demands really follow a different model. But I would say, you know, trading off the technicals purely definitely won't work. So you got to be extremely careful here. But I do like buying some Bitcoin at this point, just ahead of you know, this volatility and stuff like that. Markets tend to price in you know, Bitcoin as a safe haven asset, and so I'm looking at buying some on this possible dip over here. If we can get back into this nice little zone here, that's where I want to purchase some. Maybe just, you know, half a coin, 1 coin, something like that. Hold it up, you know, make a couple of thousand. That should be good. It's obviously me speculating completely. This is not anything to do with any fundamental or technical analysis. It's me speculating on a whim, all right? This is a complete gamble with Bitcoin that I'm pointing out here. This is not something that I'm saying, oh, you should be doing this because it has a 100% success rate. Nope, I'm not saying that. I'm just saying I've been noticing this is on the uptrend and it's consolidating above resistance, and I think that it might be good for a short-term play to the upside. That's all. Okay, let's see here. Lockdown for 3 months has bleak lessons for the world. Singapore expense list. Okay, Wall Street Journal. Let's have a look. And obviously the news is going to say that it's all because of the virus cases, right? That's what the news is telling you. Remember, and I see a lot of people also telling me that, oh, don't you think it's because of the virus cases, right? But you must ask yourself, how or why would, you know, virus cases rising again, you know, affect big tech, which are literally benefiting from those cases, right? As more people stay at home, stocks like Zoom and stocks like whatever else, you know, they'll start to pop again, right? They'll start to pop again. Why? Because people will start to use them even more, right? Think about it, okay? Just because you are sitting at home, does that, and then also the government's not approving a stimulus check, right? So that's another thing that's weighing down on the economy right now, because that's direct fiscal stimulus that's being held back. That's another thing you got to take into account, right? It's so many things going on right now, too many things, right? Blackstone earnings tick higher as tech lists portfolio, so Blackstone there. Funny enough, yesterday LinkedIn sent me a notification that somebody from Blackstone was looking at my profile. That was really weird. London's centuries-old insurance market investigates its slavery rule. Wow, okay. Visa's plate purchases face antitrust scrutiny. Oof, sounds bad. MasterCard did badly, huh? So I'm guessing, I don't know how Visa did. Coronavirus economy has been mixed back for credit card issuers. Douchebag swings to profit, lowers bad one provisions. Oh, that's good news, but they still are in a big poopy. China gives market more say in setting yuan's value. Okay, Sony looks well prepared. Yeah, this was good. Sony PS5, you know, being announced. I personally want to buy this console. It looks so beautiful, but it's so big. My goodness. Jeez, I don't know, man. I really don't know if I want something so huge, but I mean, it's dope. I would buy it alone for the controller. It's such a great freaking system. I don't know, man. I'm still undecided if I want to get the PS5, but I really am thinking about it for sure. Okay, next, pre-market movers here. Let's have a look. Dow Jones, Apple down, Boeing. Let's just see a red, basically, right? Even Coca-Cola down 1.4%. We have news here. Not that, okay. 8:30, we had these come out. Majority of news out for today. So Visa, there we go. Not out yet. MasterCard did worse than expected. UPS did better than expected. Boeing did better than expected, but still sold off. Anthem, that's the insurance company, did better than expected. ADP, GE did much better than expected, with free cash flows turning positive. CME, that's a exchange group. Let's see here. A whole bunch of other companies going to be reporting earnings today. Baidu, Avalon, Rollins, Garmin, Moscow. Okay, SX is a REIT here. Yeah, big earnings plays today. And other here, First Solar. What the heck? Wow. We called this out on the Discord too. It's weird. Wow. It's up 10%. Jesus. So this is the thing, right? We're literally pricing in. How more obvious can this get, right? We are pretty much pricing in a beat for, you know, clean energy, right? Clean energy beat. I don't know what to say, man. It's kind of like, you know, up to you guys how you want to play this. But to be honest, I'm just gonna be staying out of it. ADP here, 6.8% Bunch, Sealed Air, Chubb, One Toe, Garmin, 6 flags down. I wonder why. Probably bad earnings and probably bad guidance. Cruise lines getting hit again on probably the news of the cases rising. So yeah, across the map, man, looking terrible. Microsoft down 2.7%. My calls are probably going to be dead. Okay, let's have a look at this here. Let's see if we can do some ticker breakdowns today. Visa, 200 calls for January. Well, wow. So obviously selling off because MasterCard sold off. I don't think it reported earnings, did it? No, it didn't. Broke below, came down to close this gap over here. That's what it did here. I mean, yeah. I mean, I like the idea of buying it now when it's sold off. I do like the idea, Bradley, but I would say be cautious. By the way, guys, if you're here attending the stream and you enjoyed so far, make sure you smash the like button and click subscribe if you haven't. We do this Monday through Fridays. This is a pure educational stream which concentrates on pre-market breakdowns, and we teach how to trade the stock markets. Of course, none of this is financial advice. We just go through the setups that I know. You know, if you're interested in learning more, follow my Instagram page. It's in the description below. Of course, you know, we are partnered with OptionSwing, which is one of the most successful online trading communities that concentrate on financial education, and AMD head of education for that same Discord. So I hope that you guys like it here. Welcome into the stream, and welcome to the tribe, the EGA tribe. So this is a midweek update. We usually have a different stream setup, but this week's a little different. So if you truly want to see more, and you know, if you want to help me out, hit the like button, the thumbs up that's below the video there. That really helps me out to allow this video to reach other people. Also, feel free to put your tickers down in this format right here, the approved format, and I will try my best to break them down for you. I'm really hoping that we can reach about 90 likes today. That would be dope. If everybody can just take a second out of their day to just hit the like button, that would really make me feel great. Thank you very much for doing that, and thank you for taking your time out to be here. NEO 34 calls for December 4th. Damn, that's very far. But I mean, I see the possibility. Uh, 34, yeah, this, I mean, it's possible. It's possible. Let's actually redraw. Let's redraw this fib here, because we got to do an extension here. So got my fib retracement. This is your swing low here. So we're going to go from a swing low to the swing high and see where that extension is. You're seeing 34. So this is your swing high here. Just a little further bit down. There we go. 34 will coincide with the 61.8. Yeah, I mean, if we break above this, then yeah, there's a high chance that we go to 34, I would say. The first stop at 31.94 though, and then second stop to 35. So that's what you're looking at there with NEO if you're looking for the projection upward for the fib. JP Morgan, $115 calls, I'm guessing, for January. JP Morgan, let's have a look. I actually like this one, and I actually like it more now that it's selling off with the volume still intact here. Definitely looks interesting. Volume is actually pretty decently staying the same, flowing in and out here. So I want to say, yeah, possible, but 115 might be a bit far of a strike. That's, I mean, I see what you're doing. You're aiming for this up here. I would have aimed for 105 that, or 106. That would have been still okay. 105 is like the best, in my opinion, for your risk to reward ratio there. I think 115 is a bit high. That's all I'm going to say. Tesla 420 by next week. Let's have a look. Well, I mean, I wouldn't be opposed to it. It's actually forming a kind of a triangle here if you look at it. Oh, and it broke below it. Never mind. Just kidding. Well, looks bearish to me for the time being. 420, possible bounce. Yeah, I would say wait a bit though. I think your strike, I mean, your expiry is too near. That's all I'm going to say. Next week. Might not be enough time, Douglas, unfortunately. Bitcoin, the continuous call option. Yeah. Can you look at Sony, please? Yeah, sure. Yeah, so Sony here rallying on the news of PS5. And yeah, it's looking great, but I definitely wouldn't buy in here. This is way, overextended. Needs to come back down. But I think it can continue to run though with the exuberance of the market, since people have nowhere else to put their money. If Blackstone hires you out, you better keep doing a stream on the low. Yeah, I definitely will. AMD 89 calls 1113. I heard you mention to wait out after the election to pick up contract, but I'm already in this, wondering if I should hold or cut. Yeah, I'm in AMD as well. It's hurting, but my expiries are a little further out. So there was a huge volume outflow yesterday, which was very, very disgusting. And then we had Lisa Su come in and destroy our nice little uptrend that we had going. So I mean, it is what it is, right? What can you do if the market doesn't cooperate with the CEO of the company? There's not much else you can do, right? But we did, we got to see if we bounce here or we get rejected by these moving averages, because if not, we're going to see an extended downtrend here for a while. I honestly, if I were you, I would cut it for now. Just cut it for now. T-Doc. Sorry, it's not Friday. Yeah, well, I'll come back on Friday with that. I'll definitely put it into the vote. Pinterest, 55 calls, ER today after the bell. Okay. Yeah, it's down a little bit pre-market by $2. Looks great though. Looks like I don't know if it's gonna. Oh man, no, I don't like playing this to the upside. Risk to reward down favors the downside, but then at the same time, of course, earnings is gonna be something that you are not gonna be able to tell if it's gonna do good or not. Stock has beat earnings for the past. This was a bad beat. This was a surprise beat. This was a bad beat. Very unpredictable too. You got to do more research about Pinterest before you get in. But I don't like the risk to reward betting on the upside here. That's all I'm going to say. Thinking to rearrange my long-term portfolio and was considering investing in EV companies, example Workhorse, Neo. But now I'm concerned about possibility of EV bubble. What do you think? Well, with EV, remember this industry is fairly new. So getting into any of these are going to be long-term bets on growth companies. Neo is undervalued fundamentally. Workhorse, I haven't done enough analysis on it for me to give you any guidance. Tesla is now overvalued grossly, but it's priced as a tech company, and the reason for that is because of a very important resource that they own, and that's called data, right? They collect a lot of data. So I wouldn't be overweight on them, but I would make them a small part of your portfolio, like maybe 10%. That's all I'm going to say. Thanks, T, no problem. Snap, $35 puts, 1120. I feel like we spoke about Snap in the previous live stream, and I mentioned here would be a good time to sell some calls and buy some puts at the same time. You could do a spread, to be honest, and make some decent cash here. So yeah, I mean, 35 puts seems okay. Spoke about that already on the previous live stream. You just gotta wait though. 3 weeks out, probably not a good idea though. You might want to take like a month and a half out. Netflix $500 calls for 1120. Netflix 500 calls for 1120 up here. Yeah, looks decent. Looks like a decent play. Going up to test this old support as a resistance. This is a dual zone over here. Yeah, I would say that's a decent play. By which day? 1120. Yeah, I think that's okay. You could hold that one. The earnings were a little worse than expected, but then I feel like this is still on a downtrend, so you got to be careful. What you're only betting on here is a relief rally, Chirag. That's all I'm going to say. You got to be really careful, okay? I mean, you're playing this to the upside only as a relief, and then when you get there, you have to sell right away. I have some 1120 calls that are down, of course. You'd recommend a hold at least after election week, so see what happens before cutting them. It's up to you. That's all I'm saying. I would say it's better to possibly sell them right now and then take a different position next time when you're a bit more certain of what's going on. Thank you guys so much for the 62 likes. Let's see if we can get about 20 more. You think we can get 20 more likes? I would appreciate that. Thank you. XLI 80 calls for 1120. Let's have a look at that. That's the Industrials Select SPDR. You're saying $80 calls for next month. You're betting on a bounce play, but we're about to go into a golden cross here at a very, very accelerating pace. The Dow Jones not recovering at all here. You can see Dow Jones really selling off big time. Why? Because of all the COVID news, right? So the multiple angles of the market being hit at really weird times. I don't like this bet right now, unfortunately. It's coming at a weird time, and I would wait a little bit before getting in when you have some confirmation. Hey T, are you going to break down NEO again since you were feeling under the weather? I actually broke it down on Monday, NEO. I broke it down again. I broke down the fundamental analysis, gave you guys a valuation, and I broke down the stock as well. So if you missed that one, you should probably go watch the video on Monday's live stream. It's already up for a replay. You can go check it out. Hey T, Facebook 340 for next year. Okay. 340, damn, that's really high. But I mean, I guess I could see it. I could see it happening. Facebook is at a fair valuation. I want to say, okay, it's slightly undervalued, but if you take into account the margin of safety, I want to say it's at a fair valuation. 340 will be a overvaluation for Facebook right now. But you can see volume has been really nicely increasing over the time, and I have been seeing some big volume buying. A breakout above this level here would see it flying up to $300. So yeah, I mean, I wouldn't be opposed to holding that one, Sarah. I don't disagree with it. I just think maybe you might want to wait a little bit and try and get it at a deeper discount. But you know what? Don't try to price it in, or don't try to time it. I'd say it's fine. I'd say hold it. All right, I'll watch it again. Thanks again. No problem, man. Absolutely. No more tickers. Is that it? Did we cover everything? If so, I want to say thank you guys for attending the stream. Tomorrow, hopefully my internet gets fixed, and then we'll have a really good... Oh, PayPal long... Oh, so I was looking at PayPal yesterday. This is a good one. I really like this one right now. It's down pre-market, but I like where it's at. Nice little uptrend, and we're on the bottom here. This is a nice swing play to the top here. I would say 30 or 50 days out option, you know, take some 208 strikes calls. This will be a good play for short term swing. Looking at possible bounce here ahead of earnings. This is something that I'm looking to play in the next week. If I can see the market retract here. If I can see the market retract. So I'll be looking at PayPal as a possible play. That's a good one to bring up, Douglas. I love you too. So yeah, lots of things going on today. I appreciate you guys taking the time out to being here. Remember that this stream is in the midst of getting upgrades and stuff like that. I have everything set up. It's just my internet is not set up yet. So I'm using 4G connection from my phone. I'm actually very surprised that it's working pretty decently. So in the meantime, I want to say thank you all for attending the stream. I'll keep it short and sweet today. Tomorrow, hopefully we can do a longer one and continue on this momentum forward. You guys have a great trading day. Make sure that you, stay vigilant. Don't be trading any types of puts here. All right. Do not be buying puts, please. You know better. All right. Everybody who's from the Everyday Growth Advisors tribe, you know that getting into puts here are way expensive and doesn't make sense. The risk to reward ratio doesn't favor the downside here. The risk to reward ratio favors the upside now. So wait for the turnaround, wait for the wave confirmations, the wave up and the wave down twice, which will take a couple of days to form. I'd say recommend not playing anything at all. Just sit on the sidelines and scalp stuff if you can. All right. Possible scalps will include anything that is solar, anything that is financials, right? I'd even say possibly JP Morgan, right? Try to scalp this one. Try to scalp Goldman Sachs. I'm definitely sure that these will rebound at some point in time. Try to scalp these to the upside. Boeing, which had a great positive beat, but is kind of selling off still. These are the ones that you want to really play. Okay. You want to definitely be selling puts. Absolutely, Rainiel. Yep, I agree. So with that, I say have a good day, and I will talk to you guys tomorrow. Remember, we have a webinar in place for tomorrow's session, and we're going to be going through Ivy Crush, how do you avoid them, and the things to look out for. All right. This will be an interesting webinar, the Ivy Crush one. So keep a lookout for it, and I hope that you guys have a great day, and I'll see you guys soon. All right. Take care, guys. Peace, and love you all. Much respect. Bye-bye.